Yo, what's up, guys? This is your boy OGYP. So, guys, today I'm going to analyze Nasdaq, gold, and US30. So, I'll start with Nasdaq. So, when I analyze Nasdaq, I start from the daily time frame so that I can get the clear view. Daily time frame for me is the same as the weekly, but on daily it shows more information than the weekly. So, when I analyze, I highlight the highest point right here, and the current lowest right here. And then I highlight where the market reverses the turning points of the market. You'll see what I mean in a bit. It'll make sense. Let me delete that. So you highlight the points where the market touches and reverses. We highlight these points because Nasdaq moves in zones, and where the market turns and reverses, that's how we identify the zone. So I highlighted there and here. This is the points where the market touched and reversed. So we go to the H4 time frame, which is the next lower from the daily. So on H4 we're gonna adjust our zones so it can fit. You get what I mean? Yeah. So after identifying the zones, we draw a trend line. For a trend to be valid, it has to have at least 3 touches for me. No, 2 touches, then the third touch is my entry point. You can see there was a touch right here. There was a touch right here, second touch. And then the third touch, it created a massive sell. I wish I caught that sell, but I was doing my things. The market can humble you. I didn't see that one because I trade on the lower time frame. So after drawing that trend, you draw the one below. So you can see I drew the one below, and now it's a proper channel. You see, it's a proper channel. So we can see that the market was ranging on this channel. It was ranging up, down, up, down, up. Sorry for that. Up, down, up, down, and then it created a fake breakout and went back in the channel, and then it broke out, retested, and then it bought. So we know that after a trend, when the market breaks a trend, it will create a 90% rule, which is up here. So at the point of breakout, we know we have to buy and hold until that part right there. This point is crucial because we know the market is going there, but the market is not a freeway, so it won't just shoot up. We're gonna have some ups and downs and points of stopping and reversing. You get what I mean? So now we are at the point where the market might reverse for the longest time, but we won't just sell or reverse with it because we don't control the market. We do what the market says. So you can see I highlighted the point where I think the market will reverse because it's a zone, and I highlight the point where there is a zone again, and then I'll highlight the top one right before the initial target. I'll highlight this one. So you can see that the market is at the point of reversal. We don't buy on a resistance. So Since we don't buy at the resistance, we have to sell. As long as the market is below the resistance, we have to sell until that point. But if the market decides to break out, let me delete this one. If the market decides to break out, it will of course break out, retest, and buy to that point, because it's a zone. So we don't know when it reaches that zone, what is it that it's gonna do. It may reverse from that zone, so that's why we just set it as a TP. You get what I mean? Yes, sir. So right now, because it's below the resistance, we have to sell. We have to sell Nasdaq. We don't put the stop loss just too far, because this is a H4 time frame, and you know Nasdaq, it doesn't play. It doesn't play. You might think it was made to deal with you personally. Yeah. So I don't go below H1 when I'm analyzing. I only go there for entries. So you can see that Nasdaq is selling. I can see a double top from the H4, which means it's a stronger one. Let me show you all on H1. You'll see the double top, I meant to say. You can see the M formation right here. And we know that M formation is a reversal pattern. My phone, I have to buy a new one. M formation, we know that the market is selling. You get what I mean? So let me delete that so that I can have a clean chart. Let me go back to the H4 so you can see the direction. There's a direction. We are selling. So my tip for you is that you do not close your trade until it hits a TP or a stop loss. That's how you maintain consistency. Like, let's go to gold. Let's quickly go to gold, and then we'll go to US30. And I upload the video as soon as I finish analyzing. Yeah, so guys, there is gold. On gold, we're gonna start on daily time frame too. I don't want this video to be too long, so I'll just quickly do the analyzing, not the talking. Let me delete this. Let me delete all this. It's been long since I traded gold, so don't judge my analysis. I was just analyzing to see. Let's start on weekly time frame, because I don't really see the direction. Weekly. So guys, you can see there's a trend. There's a trend, and I said for a trend to be valid, it has to have a minimum of 2 touches, and the third one is an entry point. So there is a touch. No. Let's just do the let's skip gold, because I don't like to force trends and zones where it's not clear. So here's US30. So on US30, let's go to the daily time frame. The daily time frame. US30 is moving somehow. So on the daily time frame, we highlight the highest point and the lowest point. This is the lowest current lowest point and the highest point of all time. So we're gonna go to H4. From H4, we highlight where the zones where the market touches and reverses. This thing is taking time to load. I'm sorry for that, guys. So when we highlight those zones, we know that the market will respect in future. We can leave them there for too long, but when the market comes, it will respect. There it is. I'm highlighting the points where the market touches and reverses. Sorry for the silence. There is the last point that I will highlight or take note of for this analysis. And then we'll draw a trend line. I told you guys, for a trend to be valid, it has to have a minimum of 2 touches. 1, 2. Yes. So this is the point. First point. Second point. And the last point is here. No, like our initial target is there because there's a zone and there's a trend line. So we call that confluence. Like when you just know that it's gonna take place like that because we have 2 confirmations that the market is going there. So you know the market likes like a ladder like structure. When it moves up, down, up, down. It like breakout, retest, breakout, retest, breakout, retest. I hope I'm making sense. So it moves like that. You can see that there's a build up for this kind of structure right there. It moves like this. It moves like this. The market moves like this. A ladder like structure. So right now we're gonna highlight that point and then make it sure that we switch the candles. I'm sorry, I hope you see, I hope it's still clear. I'm sorry for that. So right now we will highlight that point right here, and we know that US30 is buying. US30 is buying until it decides to break. US30 is going to this point right here. US30 is going to that point until it decides to break. That's when we will consider selling. And when we sell, we will sell to this zone right here. So thank you guys for watching till the end. Please like, subscribe, and invite your friends to like and subscribe. Please join the OG Traders Motivation and Focus channel, and I'll leave the link in the description just in case you interested. So let me put the long position right here. Right until this point, and I'll come back with updates. Let me take a screenshot of that. Let me go to Nasdaq too. And take a screenshot. So I'll come back with updates, guys, on how the market went. hope you get me. Yes. So I took a screenshot. Thank you guys for watching. Please like, subscribe, and hit the notification bell. Comment on what you think about the video or the way I approach the market. Thank you guys for watching.